Zero-knowledge technologies will be one of the trendiest topics in a few months due to Ethereum's growth, particularly Layer 2 protocols. In today's video, we'll show you a hidden gem that you really must include in your portfolio. Hello folks, welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Oh, and know that the prices of cryptocurrencies change frequently, so by the time you watch this video, it might have changed to a whole new value. The content in this video is for educational purposes only and hence should not be considered as financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions. Without further ado, let's dive in. Investing in potential initial coin offers, or ICOs, can be a beneficial approach for optimizing your investment returns. Initial coin offerings provide you the opportunity to buy coins or tokens before they are posted on exchanges, and usually at significant discount. The problem is that most ICOs aren't really good, and the ones that are in such great demand that you'll be lucky if you get a chance to acquire them. One of these highly awaited ICOs for Mina, the Mina protocol's native coin, took place a few months ago. The investors who were able to acquire a spot in the Mina selling queue have already seen a 10 to 20 times return on investment, but money isn't the only reason why the Mina protocol is being discussed. We'll teach you everything you need to know about today's lightest blockchain. What is the Mina token, how does it work, and why should you care about it? The Mina protocol was created by two computer scientists, Evan Shapiro and Isaac Meckler. Evan and Isaac have been pals since high school and have experimented in Bitcoin technology since 2011. Evan remarked in an interview that he didn't take cryptocurrency seriously until the 2017 bull run, when they realized that all cryptocurrencies had the same fatal flaw. As you may be aware, every cryptocurrency has a blockchain that stores its transaction history. The chain's blocks all have the same symbol, and new blocks are added at regular intervals. Bitcoin, for example, has a block size of 1 megabyte, and a new block is generated every 10 minutes. The overall size of the Bitcoin blockchain grows by 1 megabyte every time a new block is added. To verify that they are processing the appropriate transactions and earning BTC, Bitcoin miners must store the blockchain history of Bitcoin. Bitcoin nodes strengthen the security of the cryptocurrency by keeping an up-to-date copy of the Bitcoin blockchain. Many businesses who hold or accept BTC as payment run a complete node to boost security, and nodes are the source of the majority of Bitcoin security. As the blockchain grows more prominent, it becomes increasingly difficult for Bitcoin miners and nodes to maintain transaction history. Currently, the Bitcoin blockchain is roughly 350 terabytes in size. Now, Evan and Isaac claim that it'll only be a matter of time before cryptocurrencies like Bitcoin become so large that only a few miners and nodes will be able to keep track of their transactions. As a result of this increased concentration, cryptocurrencies would become subject to assault and manipulation. Cryptocurrencies may become so centralized that they lose their distinction from the current financial system. When Isaac was working on his PhD in cryptography, he discovered that using zero-knowledge or ZK technology, he could shrink the size of a Bitcoin blockchain to the size of a few tweets. After recognizing they had solved crypto's critical issue, Evan and Isaac co-founded O1 Labs in San Francisco in 2017 to build the CODA protocol. CODA protocol was renamed Mina protocol in September 2020 as the result of a lawsuit filed by R3, an enterprise blockchain business, in 2019. The codenamed R3 was said to be too close to its CODA network. The Mina protocol was created and is maintained by O1 Labs, but it is officially owned by the Mina Foundation, a Cayman Islands-based nonprofit that was incorporated in February of this year. The Mina mainnet went live in mid-March after nearly 3 years of development, backed by some of the industry's biggest venture capital firms, including Multicoin Capital, Polychain Capital, and Coinbase Ventures. The Mina Foundation held an initial coin offering, ICO, in April, and the Mina token began trading at the end of May. The Mina protocol is a cryptocurrency blockchain that enables smart contracts and is based on proof of stake (POS). The blockchain is planned to have a fixed size of 22 kilobytes. Mina's use of a zero-knowledge proof switch, which was co-created by MIT professor and Algorand founder Silvio Macaulay, makes this possible. Zero-knowledge proofs allow you to prove something without having to provide any supporting evidence. We recognize that this is a challenging subject to grasp, so we've devised a simple analogy to aid comprehension. Imagine unearthing a massive chunk of solid gold in your lawn and wanting to tell everyone about it. We're certain they'll be skeptical of your discovery. As a result, you'll have to show them proof. You may either bring that massive lump of gold and offer it to each buddy in person, or you can take a photo of it and exhibit it to them instead. In the context of cryptocurrencies, bringing physical gold over for your friends to view is the equivalent of needing to download a Bitcoin blockchain's transaction history. Because you have to bring all that gold to each friend, which takes a long time, it's neither simple, efficient, nor easy to scale. In the context of Bitcoin, a photo of your golden find is a snapshot of the cryptocurrency blockchain transaction history, which is speedy and easy to scale. You'll be able to show each friend the photo more rapidly because you're carrying a photo rather than a large amount of physical gold. Recursive zero-knowledge proof is used in the Mina protocol to take this concept a step further. Rather than establishing a separate 22 kilobyte snapshot for each transaction and block, each additional transaction and block is included in the same 22 kilobyte snapshot. Mina is the native token of the Mina protocol. Mina is used for staking and will eventually be used for the administration of the Mina protocol. The initial quantity of Mina is 1 billion tokens with no upper limit. Mina's annual inflation rate is 12%, and it will drop to 7% after 2 years. Changes to the inflation timetable can be voted on by the community. Mina's original supply of just over 20% was sold to private investors over 3 investment rounds. Mina's pricing ranged from 7 cents to 15 cents during these rounds, raising little under $30 million. Only 7.5% of Mina's initial supply was sold on the coin list for 25 cents each during the Mina ICO, with the remaining 34% allocated to community benefits. Another $18.7 million was raised as a result of this. When you combine Mina's vesting schedule with its base inflation, the effective annual inflation rate is around 300%. Based on current trends, investor sentiment, and the overall direction of the cryptocurrency market, we believe Mina Protocol, MINA, has a great chance of hitting the $15 to $40 mark in 2021, as long as the trend continues and the team continues to work on their products and collaborations. With this, we have come to an end. We hope this session was informative. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.